So welcome to the session. We are looking at startup financial management fundamentals. Here I will be breaking down some core fundamentals that every serious entrepreneur should be able to know and practice if they want to build a financially stable and growing business, growing startup. And if there is one thing that you cannot get wrong, there's one thing you cannot assume as far as your business is concerned, is your financial management. And there are some core fundamentals that you need to pay attention to and practice on a daily basis, weekly basis, and monthly basis that will play a critical role as far as your business is concerned. So as I begin to share these practicals, they are very practical. These fundamentals, which are very practical, begin to look at which ones do you need to start adopting and which ones do you need to stop doing? Because I'm definitely talking about things that you should not be doing if you really want to build an incredible startup that will thrive and remain relevant for a very long time. The success of your business depends on how well you manage its finances. You can be very good at marketing, but your business struggles because your financial management is terrible, especially as a startup entrepreneur. And that is why it's important to understand these practical fundamentals and use them in your startup, in your business, which will play a critical role as far as your sustainability is concerned. Financial management is a key element in business sustainability. It is difficult to achieve business sustainability when you are struggling in how you manage your finances, or if you don't understand certain fundamentals and how you can bring them in your business. So let us look at these fundamentals, and I assure you, you'll see many of them that you need to pick up and start practicing in your business from today, which will play a very long-term impact in your business. And I'm sharing this as somebody who has started a couple of businesses, and I understand the impact of these fundamentals. I have started about 4 businesses, more than 4, but others have failed, but 4 are operating right now, right? So I know what it means to start a business that is struggling, but with the right knowledge in financial management, it can contribute a lot. I have also consulted with hundreds of startups who have limited finances or who don't have the funding but are struggling to have their finances right because they don't understand some of these important fundamentals that are the foundation of financial sustainability as far as your startup is concerned. Point number 1. When you are starting a business, as far as finances are concerned, you need to make sure that when you are spending money, you need to spend money to survive before you thrive. Spend money to survive before you thrive. Many people make this error of trying to spend money anyhow and trying to show that they're in business and they're doing well. No, when you have just started your business, you need to see how you can spend money with the purpose of survival. Because when you start a business, I always advise people at the beginning stage, at the early stages of your business, your major goal is to survive before you thrive. Because if you don't survive, you will die. That's why it is possible that many startups operate for 3 to 4 years. They are still in their survival mode. But if you are in your survival mode and you are not spending your money with the consciousness that you are in your survival mode, your business will die very soon. So keep on top of your budget and avoid cash flow issues. Differentiate the business expenses that are essential from those that are optional. In your survival mode, you spend money only on essential things and keep things that you can do without. It is possible that there are certain things you can do without. They may look important, but you can do without it. You keep it aside. You keep it aside. You see? So you need to make sure that you spend money on things that are essential and let optional things stay aside, right? Like, for example, we're moving to a bigger space in our office, in the business. I wanted to repaint the business, the building, and put better chairs and better tables and all of that. Yes, those are good, but they are optional. So the money was not enough. Okay, you know what? We're going to focus on essential stuff. It took us about a year or so in the new office where we were able to change the furniture and other things. Furniture is important, but it's optional since there are smaller tables and smaller chairs to use. So the money went into things that are very essential. Went back to capital, maybe go back to employees, go back to internet or anything that is essential for the business to operate. So when you are in your survival mode, do not spend money anyhow. Spend money, incur business expenses only on core essential things. Those things that if they are not there, your business can struggle. Your business can even come to a standstill. That should be your mentality. The second fundamental, track and monitor all spending. Apart from spending on essentials, point 2 is very important. Maybe for those who are already experiencing some growth, you need to track and monitor all expenses, all your spending. Document all your spending. Even if you pay transport for $1, $2, 500, 1,000 to where, document it, monitor it. At the end of the week, monitor your expenses. Know where more money is going to. Are you spending more money at the end of the month in energy? Are you spending more money in transportation? Are you spending more money in employees? Know where your money is going to and why. And if possible, the impact of that spending on the business. So if you don't have data that you are tracking all your expenses or all your spending, then you're doing something wrong as far as money is concerned. Okay? Number 3, focus on organic marketing and customer acquisition. Yes, this is very important. It affects your finances. Because I've seen many startups struggling because they try to put a lot of money in paid marketing. Meanwhile, they don't have that a lot of money. They don't. You see? So they put a lot of money in paid marketing, which now affects their finances. At the startup level, one of your secrets would be how can you make sales organically? How can you make sales organically? How can you make sales without spending a lot of money? How can you do marketing and acquire more customers without spending a lot of money? Like, how can you use Facebook and do marketing without doing paid ads? You see, like, here's what I used to do. Even till today, I have never done Facebook paid ads. But we do a lot of sales from Facebook. I've been able to build following organically. I joined a lot of Facebook groups for the purpose of marketing. That's organic tactics. I joined a lot of WhatsApp groups for marketing purposes. You see? So it is important that you understand how you can take organic actions. There were times that we used to go to churches on Sundays just to go and present. The highest money that the highest amount of money we're going to spend is on transportation. Maybe 1,000 francs, 500, 2,000, depending on where we're going to. We go and present to 200, 300 people, organic marketing. You see, sometimes we do black and white flyers. We take a 10,000 francs, we can do 200 flyers, we share door to door or wherever we're going to. You look at ways that you can do marketing, but which is very cost effective, or it basically costs you nothing, because you need that a lot at your startup level. Because one thing with startup paid marketing is sometimes you can put money in marketing and you don't make the sales because you don't have a good brand name. And one thing that I love about organic marketing is that it contributes in building your brand. When you do paid marketing now, the brand can be responsive and your investment in marketing can pay you at that particular time. You see? So you need to look at in your business right now, what kind of organic marketing techniques can you employ to market and acquire customers while at the same time building a strong brand, so that when you're doing paid marketing, you can make good use of it. You see, maybe sometimes just doing videos of yourself on your phone and talking and sharing on TikTok and sharing on Instagram and Facebook, that alone can be organic marketing. It costs you nothing. You're doing it yourself. You're not paying an editor. You're not paying anybody doing it. Adjust it, reduce the size, whatever, share it on social media, ask friends to share and comment. You see, it builds the attention and it keeps on growing. And that consistency is important. Consistency is a very important part of organic marketing. Okay, good. Number 4, practice bootstrapping if you have limited funding. Yes, practice bootstrapping if you have limited funding. Exactly. This is one thing I've done a lot in my life. I have never had external funding, external investment in my business. I do a lot of bootstrapping. Even up to now, I still do bootstrapping. Bootstrapping means that it's just a term where you can take money from, if you're a salary worker, for example, you can take money from your salary and you keep on investing in your startup. You can do that for a long time. Like I've been doing bootstrapping personally since 2012. Like all the businesses I have built them with money from my speaking. And bootstrapping also means that you live a very lower class life, right? You don't live a very high profile life. Maybe instead of living in an apartment, you live in a one-room house. Like I've lived in a one-room house for so long. I moved to an apartment, I think it's last year, because I was intentionally saving money. There are many things I could not do because I was saving money to bootstrap into my companies that I was trying to build. You get the concept. So the same as you can bootstrap a service that you can do and use to build a startup. For example, a software developer, or you can build a website. You can build websites as a freelancer, use the money and invest in your startup for it to grow. That's bootstrapping. You can do that for 1 year, 2 years, 3 years, 4 years, 5 years, whatever, until the business gets stable and can be self-sustainable. You can do that. So bootstrapping can be a very good financial management tactic that you can use, okay, for you to get all the money you need into the business for it to go forward. And bootstrapping can also be internal, where as a startup, as the business is gaining stability, you start taking profit from that business to start fueling another business to grow. That's how I've been able to build my other businesses. When this business is getting stability, I don't get confident that I'm already making money. No, I'm still bootstrapping. I'm still living as I used to live. I just start taking profit from the stable business. I start building a new business. You see, that's still the concept of bootstrapping as far as that is concerned. Good. Number 5, create and maintain a monthly and yearly budget. Yes, it's very important. Budgeting is very important. Stop spending money out of the blue. Stop spending money anyhow. Have a budget that holds you accountable. Have a budget that you follow. Have a budget that is structured for the month, for the year, to guide you to do that. So it starts with a yearly budget. Set yourself a budget at the start of each year. Just create a simple budget. How much will you spend this year? Calculate your business rent. Calculate electricity bill. Calculate all of it. Do the average calculations for the whole year. Also do projections for your sales. We project that in January we're going to sell this, in March we sell this. Or it's going to give you a snapshot of whether it's going to be a profitable year or a losing year. If you do the budgeting and you notice that your sales or your sales projections are lower than your expense budget, it start showing you that it's not giving you a perception of how your year is going to look like, and you can start adjusting and developing strategies to make sure that is not the case. So whether you're a small startup, whatever you're still doing, you need to create a budget. Okay, create a budget of this is what we're going to spend throughout the year. These are the sales projection for the year. Set yourself a budget at the start of each year, creating a goal for you and your team to work towards. From there, you can check in at quarterly intervals to ensure that things are in order. You can check in after three months. For startups, I always encourage you should check it every month. Are you guys on course? It's very important. Since it's a small business and does not need a lot of different stuff, or it's not so large that it will not be so clumsy or so difficult to sort it out and begin to check to be sure that you are on track. Okay. Number 6, set manageable income objectives, right? Set realistic revenue targets. Yes, this is where you need to intentionally, as a startup entrepreneur, set income objectives. How much money will you make this week? Put an amount, a realistic, committed amount. How much money will you make this week? How much money will you make this week? How much money will you make this week? It's very powerful. This is something that we do. This is something that I do in my business, where I request everybody submit how much are we making this week. You can use the previous data for last week or last 2 weeks, last 3 weeks, and set projections for the week. You can use industry trends or whatever is happening around the economy, and you can set income objectives for the week. And I like to break it down forward. Before we reach to income objectives, I like my team to go further and tell me, okay, for us to achieve this income, how many people do we need to market to? Okay, for us to achieve this income, we need to market, we need to make sure that 2,000 people see the product we are marketing. You see, that's how we always break it down. We need to make sure that 2,000 people see this product we are marketing. Okay, how do we get these 2,000 people to see? Okay, you know what? We are going to do intensive organic sharing on Facebook. We are going to make sure that we share the content or the product in 5 WhatsApp groups of at least 200 members. Whatever, we just create all of these strategies and tacticals and objectives here and there and make sure we achieve it, right? We said, good, okay, we are going to share posts on social media 2 times a day, in the morning and in the evening at 7 p.m., 6 p.m., whatever time. We do that. Okay, how many sales calls or sales emails or sales messages do we need to react to achieve this income level? Okay, we need to market 2,000 people. We also need to anticipate that out of these 2,000 people, we are going to generate leads of 500 people. These are people who write emails, SMSs, whatever to ask. I want to know more about the product. How can I get this product? When we get those leads, we need to get at least 500 leads and convert at least 30% or 40% or 60% before we can achieve this income for the week. You see, so you set all of these manageable objectives and you focus on it and dedicate their time. Everybody knows their role to achieve that particular stuff. Number 7 is keep your core financial statements. Yes. Startup entrepreneurs, keep your core financial statements. For those who are still starting, please make sure you keep what I call startup expenditure. Startup expenditure. Keep all your startup expenditure and receipts. What if you have investors tomorrow? What will you show to them that you started the business with? So keep your startup expenditure. It's just a simple list of how much you spend and what you spend the money on and the total of that. Keep it aside. Very important. After that, keep your monthly income and expenditure statement. What came in as income? What do you spend money on? Did you have a loss, a profit? Keep your monthly income and expenditure statements. There are so many templates on Google, so many free templates. Just go on Google and type income and expenditure statement template. You see many downloads, edit, put your name, begin to fit, you're good to go. Okay, these are the basic skills that you have to know as an entrepreneur. You need to have an asset register. An asset register is a simple document that documents all the assets you are buying in the name of the business. It's different from startup expenditure statement. Asset register contains only assets. Like in our business, we have an asset register that contains all the tables in the office, all the chairs, all the laptops, all the phones, internet equipment, anything bought in the name of the company, as anything that is an asset that can last for more than 1 year is in that asset register. It's there. Even picture frames is there. Everything is there in the asset register. Even roll-up banners, everything is there in that asset register. It's very important. You may need it tomorrow. Your accountant, they have an accountant, they would need it to start calculating depreciation. Okay, let's keep a balance sheet. Now, our balance sheet is optional because it's good for someone who has an accounting background to actually prepare a proper balance sheet. So I always advise balance sheet is not a must, it's optional. But the first three are critical. Startup expenditure statement, one, monthly income and expenditure statement, and of course, asset register. Okay, it's very important because it is your responsibility to maintain accurate and up-to-date accounting records. It keeps you in check to manage the business money right. It keeps you in check not to be a bad spender and to be accountable to your actions as an executive. I always say something funny. You are not an executive without records. I don't care whether you're starting your business today, start keeping records. Okay. Number 8, which is a big trap for many people, separate business money from personal money. If you are listening to me and you just collect money anyhow and jambox everything, go and repent. You are not a CEO, you are self-employed. There's difference between self-employed and a CEO. You are seriously self-employed and you're a thief. You're stealing your company's money. Because it's your company doesn't mean that you spend as you like. If you are taking company money without due responsibility, without due accountability and due documentation, you are a thief, especially registered companies. Yes, you're stealing companies' money and you should be locked up for that. Right? So start separate business money from personal money. Let your business create an account for your business, a microfinance account, a startup account. Create a mobile money account for your business if need be. Create a PayPal account for your business. Let it be separate. Put yourself on a salary if need be. Or if you need money from the business to keep yourself okay, let it be treated accordingly in your statements, in your financial statements, that allowance to CEO or salary to CEO. And then at the end of the year, according to company laws and policies, whatever, you can now collect your profits. You can go on vacation if you like, but you need to collect profits after all expenses have been paid for the year, taxes have been paid. What is left now, you can say, okay, founders profit or founders dividend, whatever you want to call it, you can do that. At least you are eating the profit, not the capital. The sad thing about what that happens when you don't separate personal money from business money is you never know when you have eaten the capital. That's one thing. You never know when you have consumed your capital because you'll just be spending anyhow. You just wake up one day and like, wait, where is this money going to? You have eaten it now. You swallowed the whole capital in your stomach. You swallowed it. If you are still following me, leave me a comment. I'm following. Leave me a comment in the chat box. I'm following. If you are learning something, are you learning something about your finances? Who has learned something new about your finances? Okay. So let's proceed towards the end. Number 9. Number 9, know of your company's compliance requirements and plan to meet them in a timely manner, e.g., tax payments. I'm talking about taxes here. Please, as you are still starting, do proper research to know. Do proper research to know your tax compliance. What kind of tax do you need to pay and how much do you need to pay? Every ethical business should pay taxes. This is for your good, because tomorrow your taxes may haunt you. You may want to run for presidency and they say that you, in 2040, they now bring news that in 2022 you are owing taxes when you started your company. These things are funny. But apart from that, pay taxes, okay? Pay your taxes. Understand your company's financial compliance that is expected from you by the institution regulating you, by the ministry regulating you. Gather the information. Gather the necessary information to know the compliance that you have to do. If you need an expert, you can talk to an expert, a tax expert, who can advise you on this accordingly, and you will be able to respect this, because if you don't pay your tax on time, for example, what can happen is you can be forced, you pay penalties someday, and penalties will cost you more money. And that's why you're losing money, because you did not respect to pay taxes on time, okay? Or your business will be shut down, and you can lose a good name you have been investing money and time to build. Okay, good. So do that. Number 10, monitor your financial position. Yes, I spoke about this indirectly, but it's very good to intentionally, as a CEO, for you to monitor your financial position. You should regularly monitor the progress of your business. If your expenses are higher than your profit, then your startup will soon die, will later die. Okay. So when you monitor, the impact of monitoring is you get to be consistently updated. Whether your expenses are more than your profit, or your profits are more than your expenses, or you are just break-evening, you know all of this so that you act accordingly. It's also an important element when it comes to strategy. Before you're designing any strategy, anything to do, definitely there should be some data. And of course, your financial position, whether monthly or quarterly, should be one of those data that you use to create and implement new strategy for your business. So on a daily basis, you should know how much money you have in the bank account, how many sales you are making, your stock levels. All of these things, they are important for you to monitor. A good business person should know the financial position. I always say something funny. If you're a serious person, I ask you, what are the numbers of your business as a last month? You should be able to give me. Last month, we made the total sales of this. Last month, our total expenses was this. Last month, our total profit was this. Last month, our stock level was this. You need to know your financial position offhand. Simple as that. It's very critical as far as business is concerned. Okay, so this is very important, fundamental, that you should not don't manage your business blind. Don't be blind as far as your financial position is concerned. Number 11, get the right funding. Yes, many people are struggling financially because they got the wrong funding. Like, number 1, except you don't have an option, I don't encourage bank loans for startup entrepreneurs. Do you know why? Because bank loans, either 1 month, the highest that many banks can give you is 1 month of grace. Then next month, they expect you to start paying back the loan with profit, right? But there are some startups that you structure very well. That is not a problem. So that's why it's good for startups, getting money that you will not be under pressure to pay back anytime soon is one of the best things that you can get. And that's why many startups go for investment. They go for equity or shares and all of that, so that people invest and they are not pressuring you to start paying back next month. Okay, so if you can get the kind of funding that will give you liberty to create and to dominate the market and take time to penetrate the market, is good for you. But of course, some people have the only option they have is a bank loan or loan from somebody, and they're expected to start paying back that money maybe a month after or 2 months after, or all of that. But again, it also depends on the performance of your business. Bank loans can also work very well if the startup has taken off the ground and is already experiencing some sales, and you know that this loan will help you to acquire more customers, enter new markets, and build new products to make more sales. Then bank loans have no problem, because you are making sales. There's cash flow. Bank loans become dangerous when there is no cash flow. You are still trying to enter the market. You are still struggling to make 1 sale a day. When you are not making sales, interest rate is increasing. You see, so it starts costing you more. But if the business is already in motion, as interest rate is increasing, you're making more sales, you're getting more customers, you're getting more grounds, you're entering new markets and all of that. There's no problem. There's no business on the surface of the earth that succeeded big without external money. This external money could be investments, sales of shares, equity, debt investments, or what they call loans. You definitely need that. So be careful. Make sure you get the right funding at the beginning of your business, so that your finances are not affected, because you get the wrong funding, your finances will struggle. Okay. In conclusion, if you do not get your money right, your business will fail. And I want to add, I said this earlier, there's a level you get in your startup that I will recommend that you can outsource and get a financial expert. Like right now in my business, we outsource some of our accounting services to an external accounting firm. So they handle it for us, so that we have the right data, the right analysis. This is very important for us as a business. Okay, so at some point, even our taxes is handled by a different firm, so that we make sure that they're a tax expert, so they make sure that we are respecting the tax compliance as far as the laws of the land are concerned. Because as a business person, as a startup entrepreneur, make sure you do your best to respect the laws of the land, especially financial compliance. All right, so make sure you get your money right, get your financial systems right, get your knowledge about all of these things right, and it will play a critical role in the kind of business that you are building. All right, questions?